Welcome to REI Accounting Talk, the show that turns those intimidating spreadsheets into your secret weapon for real estate success. I'm your host, Sarah Bratcher, and I'm here to help you master the numbers game without losing your mind. Whether you're managing your first rental property or expanding your real estate empire, we're breaking down accounting concepts into bite-sized, actionable tips that you can implement today. Hello. Today we have Melissa Korda. She is a loan officer at Conventus Lending. She's based out of Seattle, Washington. Melissa has a master's degree and she has spent over 20 years in a professional career doing flips on the side. In 2020, Melissa jumped full time into the real estate world as a lender and enjoys educating and supporting other investors. Melissa is the host for the Real Estate Invest Her Seattle chapter and does monthly teach ins on lending. For fun, she plays soccer and loves Scrabble while raising her 4 sons. Her love language is helping others and collaboration. And we are so excited to collaborate with you today and pick your brain on hard money lending. Welcome, Melissa.
Thank you. Thank you. I'm glad to be here too.
And we'll just start out and tell us a little bit about yourself, the
Okay.
good, the bad, and the fun.
Well, I made my bio sound so sweet and nice, and it is, but there's a story behind how I took that switch into the lending world. I think COVID did a lot for all of us. It changed our lives immensely, either good for bad, or maybe some of us went back to normal. But prior to COVID, I actually have a master's degree in kinesiology. And I spent 20 years in the fitness industry. So I was a strength coach. I worked with pro teams. I had this whole plan to retire as the wellness director, GM of this huge facility in Washington area. I was on that trajectory. And then COVID hit, and I became a stay at home mom for the first time. And I am a very driven woman, and that really kind of crushed me. Despite the COVID stuff, I feel like more depression than I've ever felt in my entire life because I feel very blessed. And I've always been like, the glass is half full kind of person. And I was really like struggling with just like self identity, like who am I now? Am I really just a stay-at-home mom? Is the world ending? And so I was doing one of those Zoom wine things where we were all trying to like feel normal and see our friends. And a girlfriend was like, "I'm doing a loan in Texas." And I was just like, what? Like, we're all, closed. And she's like, "Well, Texas is open and Conventus is my lender and they're working remote." And I was just so like, "Oh my God, I'm so jealous. Like, I should get a job there, probably too much wine and just joking." And then she's like, "Well, Brenda is my loan officer and she's awesome. You should call her." And I want to say a month later, I accepted the job and I became a sales analyst. So I actually like entry level, knew nothing about the lending side because the whole time I had my W-2, we just flipped on the side because, we had W-2s and, it was just like fun to do on the side. So I started from the bottom and spent about 9 months learning everything I could from Brenda, who's amazing. She's our sales director now. And she basically taught me from like the acronyms of like, what is ARV to actually, like how to help people underwrite deals and, help people realize like, is that a good exit plan or not an exit plan? So now I've been here for a little over 3 years and I love Conventus and I love the opportunities I get. And I have to say, I'm super happy that I had COVID happen. It was a God thing because I would have been stuck in this 9 to 5 or, 9 to 9 W-2 retiring through this company thinking like that was, the glory days. And I am so much happier and just in a better place. So
That
yeah,
is an amazing story. I love hearing that. Yeah, just taking the, good with the bad.
oh, it was bad.
Yeah,
I think it was for all of us. So, but yeah.
I love it. And we see, if you recognize Melissa, you've probably seen her at a conference somewhere. She pops up at a lot of them. In fact, she and I met each other at Limitless last year, and Pace Morby had just told me, "You need to start a podcast." And I was like, "What?" And he was like, "You need to just start a podcast." And Melissa was one of the first people I ran into after that. And I'm like, Pace Morby told me I needed to start a podcast. So I'm going to start a podcast. And she's like, "I want to be a guest." So I'm glad this idea and this dream has come
Yeah,
full circle here for us to chat like this. So,
totally. Yeah. You planted a seed and look at where it is now. So it's awesome.
yeah. So, did you flip houses and did you do real estate before all this, or did that come with
No, no. We did flips as W-2s. My husband's a laborer, so he's in construction and it was easy. So we did a ton of flips as our side hustle and ended up accumulating for rentals that we still hold as long-term rental. But when COVID hit, and then when I became a lender and kind of like learning this new career, kind of like the world just changing, we never went back to flips. And now I do probably like 40 flips a month with other people as their loan officer that I'm like, not happening. Like, I'm good. I'm good. So I just focus on being a landlord, and then I do passive investing. So sometimes I might see some, deals to jump into or some equity positions that I want to take. Yeah.
Yeah, and you're in a good position to see all kinds of deals happening and get creative with that. That's exciting.
Yeah, there's
Uh,
times I get a little jealous and I'm like, I'm busy working and everyone's out getting these great deals. And I'm like, oh, then I have to remember, like, don't get sucked back in because flipping is its own animal. And everyone, the goal is to get out of your W 2 and just do real estate full time. Where I'm in such a great place in my life and career that I love my W 2. Like, I want to stay here forever. I flipped for a long time. I experienced that. So, yeah, so I just have to make sure I don't get sucked back in because it is really fun and enticing. Yeah.
yeah, no, I completely get it because I have clients, I do their bookkeeping, and, I talk to people often, and I love their strategy of where they're going into, and, like, this whole co-living thing, I'm like,
I know.
"Maybe I should do this," and I'm like, "No, Sarah, you're down here, focus on this first."
I know.
Because
I
I mean, you see yeah, you see so many, great ideas come through. I get you there, that's awesome.
Yeah, no, totally.
So, what is kind of maybe the funnest or the, wildest deal you've ever funded? What's a fun story there? I know you can't tell us too much information for
Yeah.
privacy purpose.
We don't do a lot of wild things. We're pretty standard. Like we only do, the bridge side, construction side, DSCR side. But I'll tell you some wild ones I've seen that like we didn't proceed on that were pretty cool. Like the container homes, they're adorable. Like if you ever think about like a winery you want to go stay at, like this little beautiful, just angelic place. There's some place in Texas that I saw that was just awesome. But it's affordable housing solution and it's a real thing that's like people are funding and doing, but we didn't fund those at the time. And since then I haven't really seen one, but it was really cool. Another couple that we've seen that were I wish we could have lent on, but we can't are the dome buildings that are all solar. Those are pretty neat. You see those more in like Arizona and Nevada, but they're just so unique that we don't lend on those either.
Yeah. So, what advice can you give us as listeners that are investors for not making a mistake when it comes to hard money? What mistakes have you seen and what can we do to prevent those mistakes ourselves?
Yeah, so that's a great question. There's so many things. I actually do a webinar to just kind of like how to vet a lender, and there's this whole list of things like don't do this, do that, like ask about this. But I would say like some of the times we get sucked into winning on pricing, right? Like I quote something and it's great, and then another lender quotes something and it's a little different, but it's still good. I always tell people to not get so hung up on like the best rate and make sure that they're getting the best situation. So there are times where clients will come to me and be like, well, I got quoted 10% and 2 points and $3,000 in closing fees. And so then I'm like, okay, we'll probably a better rate on your points, better on your fees, but the rate's probably going to be the same. But I'm asked them to like look at it. Does the rate matter to you? Because if it's a short term flip, the rate's not as heavy as, if you're out in 3 months, it's not as big of a deal as if it's something that's like a 12-month, 18-month, and it's like a ground up construction and it's, a huge amount. If we're talking $200,000 loan versus a $2 million loan, that's where rate really matters. So you want to negotiate the things that matter to you, not just get enticed with like this great rate, like, oh, they offered this rate, but their points and their fees are like so much higher. And so I always tell people to look at the life of the loan and see like how much cost will you actually pay in the end of it and which one is better. Because I see that sometimes where people get enticed. And then like for me, sometimes people they just kind of kill themselves with holding costs. And I think that's something that we don't look at when we look at a deal. I get a lot. People will say, hey, this property is amazing. Like the guy passed away and it's such a great price. But then it's like, okay, what's the plan with the property? You want to have it to be a rental. Okay, is the area good for rentals? No, it's got high crime rate. It's borderline rural, or there's not a lot of success in multifamily in that area. Like there's different factors that it's like, well, it might be a great price, but for you, is it a great deal? And all those things come into play. The cost of the loan, the exit plan, the actual execution of that plan. So there's just some things that we get kind of like caught on with great pricing on properties and great pricing from a lender that doesn't always equate to a great deal, altogether in the end.
Oh, I love it. That's great. Great information there and things we don't always think about, we get blinded by the flashy fun things and forget about some of those things that sneak up on us, like holding costs. Yeah. No,
Yeah.
that's good. That's really good. So how do you ultimately decide if a deal is worth funding? Is it all numbers, or is there some, kind of gut like check in it, or, other factors in there?
I would say because hard money has very little like qualification marks. I mean, we're funding off of your FICO and your experience and the risk of the property, right? So it's not like we're conventional where we're doing all these checks and balances and, like it's only like three things. So we are kind of strict about, people's FICO it is what it is. So, if it's good, it's good. If it's not, then we have issues. With people with experience, we'll lend to beginners and we're a little more diligent on those. Like we wouldn't let a beginner start with, ground up construction or maybe a huge rehab where they're going to add ADUs. I'm going to be like, hey, it's your first one. Like, who's mentoring you? Or like, where'd you get the ideas from? Or like, who's doing your construction? And usually they're like, I have no idea. And I'm like, okay, so we need to like get you connected to some right people. No one's going to do this deal for you. And usually they're like, oh, I didn't realize that, I should start with a $20,000 flip and then, build from there and see how the process goes. And then we look at property too, of like, our biggest thing is just, does it make sense? We'll look at where the property is, the kind of rehab they're going to do. Again, like if it's a rental, if it's going to be sold, like has things sold in the area for this much, like maybe you are going to make this luxury SFR now or single family rental now, but is it an area that single family rental luxury houses are getting sold or people want to live? Or is it going to be the weird house on the block that, nobody who's going to buy that? So we kind of like try to work with our borrowers and understand where they're coming from. So if things are kind of weird on the plan or kind of just like on the property or the area, like we'll talk with them about it and kind of go through it. Sometimes borrowers are like, no, 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 I live in this area. Like the whole street's getting renovated. They're all going to be luxury in the next 2 years. Or a college is being dropped right here in the next 5 years. And so we're buying up all the multifamily to make it student housing. So that is just like the relationship we try to have with our clients to make sure we're asking those questions, finding out like, what do you know that I don't know? And then sometimes we tell them things and they're like, oh, I didn't know that. Like, yeah, I don't want this deal. And then times we have good deals that they come back and they're like, "Yeah, we walked it and, it's copper piping and we didn't know that," or, "We walked it and, there's this building that they won't let us into and who knows what's in there." And so they walk away from just some of the normal deals that we would have been, totally fine on. So I think it's kind of a layered process of digging into what we're lending on. But we are very hands-on. We call our borrowers, our credit team talks to our borrowers about their plan. We generally are not like just a machine that it's like, okay, you're approved, you're not approved, and like no one has a relationship. So it's kind of nice. We get to meet a lot of people and I get to hear about some really cool deals too.
Oh, that's awesome. No, I love it. Thanks for sharing all that information. Yeah, a lot of people I think might get scared of like, oh, I don't know how to do this. So you are there, even if they are brand new, you will be there to make sure they're doing it well. And like you said, you may have connections to connect
Yeah.
with, because I see in the Facebook groups sometimes like, who can do this, and nobody answers them, and it's like now I
Yeah.
can say, go to Melissa, she'll help you.
Yeah. And like that's kind of also my like love language. I wouldn't say like there's times where I'm like, get overwhelmed, but I also like encourage it. I'm like, call me, reach out anytime. And I love it. Like, if I ever complain, just be like, Melissa, you love it. But I do like connecting people. And I think, like, for me, I'd rather direct somebody in a good direction where I know like that mentorship group really helps, or like join this group, it's in your back door and they meet monthly and they have in partnership and work together and do flips. I want to put people together. And I do that with lending too. Like, if I can't do a deal, like we don't lend on mobile home parks. And so I refer those out to a couple lenders that I trust and I know that will do a good job too. I think it's just about community and it always comes back to us. So
That's good. Then that's one of the best things about real estate investors is that they love a good gathering, a good meetup, a good community function and networking and all that other stuff.
yeah, we love a good
We
networking.
love a good networking. And speaking of communities and everything, Melissa and I are both in GoBundance Women Together, and what an amazing community that is as
Ah,
well. So
yes, I love it so
I
much.
want to pop in a plug there. If you're looking for a bunch of high achieving women, go look that up too.
Yeah, absolutely.
So when you say that, you don't look at a lot of numbers. It's mainly just, the deal and the FICO. But to tie in bookkeeping, because we talk about bookkeeping a lot on here, is there anything people can do with their bookkeeping? Do you see financials for people's past job and all that? Like, is there any kind of insights on that? Like, what you see from people's bookkeeping perspective, advice you can give us there?
Well, I mean, just in general, like if you're in any kind of business to make money, you have to have some kind of accounting, bookkeeping, something. There's many times people come to us and we're like, "How much rehab did you put in?" They're like, 100,000." We're like, "Okay, cool. Can you provide, list it out, tell us what you did, and then provide like the invoices?" And they're like, they can't, or they send us like, wishy-washy receipts or like scribble down numbers. And I'm just laughing. I'm like, you just spent $100,000 and you didn't track it or like to, claim it. I mean, I don't know. I'm just like, that's odd to me, but it's not lack of like desire. I think it's just lack of knowledge. So I really do think it's important to have somebody teach real estate people how to organize and like what level. So just on the lending level with hard money, we don't look at finances as far as like your W-2s or your income. We don't look at tax returns, and many of our clients don't have W-2s. But we do look at you holistically. So, FICO is one thing, but a lot of times our more experienced investors will submit something called a PFS, which is your personal financial statement. And I'm sure you have one that you use with your clients, but these are simple forms, but they just collaborate all of your information. And it actually helps you to see like, these are my assets, these are my liabilities, this is all the property I own, these are my personal things. So when we get down a deal and there might be a question of like, are they biting off too much? They have 7 deals already, they haven't closed. Like, do they have enough liquidity? This is something that borrowers will just submit and be like, this is my PFS where I'm at. It really paints a picture for us, and it's organized, it's one sheet, we're not digging. I would say that's really helpful. The other aspect of that form is a lot of title companies throughout, because we lend in 48 states, so some states are different, but when we do construction for title companies, a lot of the underwriters for title clearing ask for a PFS of the borrower. So if they don't have one, sometimes we're, 2 days outside of a closing and they're like, "We need this form filled out." And it's long if you have to fill out their form. So if they have their own, it makes it way faster and way more efficient. And I just think it helps with just like overall accounting and like keeping things organized and just kind of like track record.
Yeah, and no, I love it. It lessens the stress on it if you already have it organized and in one place, like you said, and it doesn't take as long to find all that information. And I've seen many of people like, I don't know, here's my bank statements, figure it out. Like, I don't know how much I spent. And then you're like, oh, you only spent this much? And they're like, well, I put most of it on a credit card. And as you talk, it's like, okay, it comes from all these different places. But I get the desire to just get started as well. So if you're listening out here and that is your strategy currently, just give me a call and we'll walk you through it. I have a course coming out for people because I know cash flow has been harder to come by in the past year or so. And a lot of people want to do their bookkeeping themselves. So plug that right quick. I have a course coming out to help people break down, like in small, manageable steps, how to get everything. Because when you think of it as a whole, it gets overwhelming. Yeah.
Well, and just on that note, I'm actually working on doing like QuickBooks for my own personal stuff because I have a question like how much do I spend on certain things or where am I at just like personally and like breaking it out. And when I was like I can't do one more thing, right? But I met with actually a GoBundance gal, Sandra Payne, and we kind of talked about, like what I'm doing for the real estate side, but the personal side, I was like, oh, well, it's personal. And she's like, you shouldn't track that. Do you want to know how much you spend on takeout or at Safeway or gas? And I'm like, yeah, I do.
Yeah.
But, like, so having your tools to make it simple, like that's a godsend. So
Yeah.
yeah. Yeah.
And I do have several clients where we do their whole picture. We do their personal stuff along with their real estate stuff so we can see a full picture of where they are and where they're going. And
Oh, that's
it
cool.
helps in like long term. I know we're not talking tax strategy here, but at the end of the year, when they do tax strategy, it's easier for their tax preparer to know or strategist to
Yeah.
know the whole picture. But yeah, there are some really good budgeting out there for personal stuff, but I love using QuickBooks. The QuickBooks has a lot of good automations in it, so it's easier to just set it and like, okay, every
Yeah.
time I go to Chick-fil-A, it's gonna go to a Mills, and all that, and every
Yeah.
time I go
That's
to
what
Lowe's, it's
you said it's gonna be easy. So I'm counting on her because I'm like, oh gosh, I don't need another thing.
yeah.
I know. It'll be good.
Uh,
It'll be good.
it it will. Let's talk about the real estate lending industry as a whole and what's your take on it and what changes would you make if you were sitting behind that desk in the Oval Office making all those executive orders right now? What kind of executive order would you put down for the lending industry if you had the power?
Gosh, there's a few things that I wish we can change like that. So as a person that cares about people, as an investor, as a lender, I'm in a lot of these Facebook groups and I see so much fraud and so
Mm,
much. Sure, I can give you 100%. Zell me $1,500 for your application fee. And I just want to yell, like, don't do it. But, I also want to stay out of it too, because like those Facebook groups can go nuts. But I do try to ping on the side and just say, hey, like, make sure, you vet people and, use referral sources. But I really wish there was some more regulation around people saying they're a lender or, there's something called white labeling where people are not actually brokers. They're just out there saying, like, I'm a lender, I can do this and that. But really, they still bring their deals to other lenders like myself. I was in the situation once where we thought we were the lender, but the guy was pretending to be the lender. Like he was changing the logos on our paperwork and stuff. Or we're asked, like, can you give us all your documents? And we put our logos on them. And it's just like, no, we don't do that. But there's no regulation with these guys or gals or whoever. They just kind of do whatever they want to do and they overcharge borrowers. A lot of miscommunication, a lot of, promises made that aren't kept. And it would just make it easier altogether if there was just a little more regulation about who could say, like, I'm a lender or I'm a licensed broker. There are some great brokers in the industry that do a great job. They're there to bridge the gap between the borrower who needs lending. And, if you want somebody to out the shop out there and go talk to 30 lenders and get you the best deal and bring it back to you, like that's a great service. You pay for that. But they're very valuable in certain situations. And there are brokers that charge a really, fair fee, but then there's brokers who are charging like 4 times the lender fee to do that service. And, it's disheartening because us as a lender won't allow brokers to do that. Like we cap them at certain fees, like we don't let them overcharge. And I just feel like we just kind of need to clean that up and just have a little bit more regulation about what we do and what we say because it really like I've heard stories of people's savings being taken away or they lost deals and lost EMDs because they were, told one thing and strung along and find out later it's some scammer. And then the other thing is like your FICO pulls. Like none of us need to pull FICO to give you a quote. We'll quote you on what you tell us. If it's wrong, the quote's going to be wrong. But I mean, if you're close, like in ballpark, like we can give you a good quote without running FICO or anything. And there's many times people are coming to me and they're like, yeah, like they said this and this, and could you give me pricing? And I'll say, yeah. And they'll say, like, well, my FICO is like 680. And I'm like, oh, what happened? Is it late? Is it drugs? And they're like, no, just the last 3 brokers or lenders ran my FICO to do my application. And I just like want to shout it on the mountaintops. Like, don't let anybody run your FICO unless you are going into business with them. Like, protect that. Like, everyone put a freeze on your FICOs. It takes seconds to unlock it so we can run it when we're ready. But I just think we don't realize how valuable that is and how that is like your currency with us lenders. If your FICO's down, you're going to pay more in rate or you might not get the deal because it's so down. And I just think those are things that us as good lenders and people that are really out there trying to do a good job, like we're fighting against that to just try to like present the best possible stuff. But then you still have people who are like, well, who do I trust? Because everyone's a liar right now. And I mean, I feel that like I
yeah.
mean, I'm like, I know I'm just some other face on Facebook. But one of the things, so somebody says, well, what do I do? And that's where I say, use people that are referred. So friends that, who did you use on your deal? Use people that are referred because at least they did what they said they were going to do. Somebody that went through the experience. And I mean, things still happen, but at least it's not some, overseas, person stealing your money through some, John Dandy's Facebook account. Yeah, so those are the things that like it makes my heart hurt when I'm, out there just meeting people and kind of hearing stories.
Yeah. Are you able to give someone advice on how to get their FICO up quicker after something like that? Or is it just purely waiting for time to pass to get it up?
Yeah, so I'm not able to give advice on that because I'm not an expert. But what I've been told is there are like credit repair programs that you can invest in and they actually work. There's a few, again, find somebody that's used one and like a referral source. But I've definitely had people that are like, my FICO's this, and then 3 months later, it's way better because they paid a repair, company. Also, FICO, I've learned, is very dependent. Like FICO pulls are one thing, but the bigger ding is lates and then usage. So some people can have a 680 because they have lates, and that makes sense, right? But some people have a 680 because they just maxed out all their credit lines. And so understanding it's not just negative. So a strategy one of my clients does is she has a few different credit cards and she never lets them carry balance over like 30%. So she's using them all, but then she pays them down. So she's using credit, gaining credit, but then she's keeping it low enough that she's not seen as like high risk, and then her score stays good. So I think there's some definite strategies that people use to, at least use their credit but still maintain a healthy credit. But speaking on FICO, another huge mistake is any lates with mortgages. That makes it really hard to lend to you because, I mean, one late 5 years ago, it's, like, okay, we get it. But like if you had a late last month on your mortgage, like we're a mortgage company, like that's kind of a tough one. So
Now,
yeah,
that's really showing your cash flow's strapped right now and you're
yeah,
juggling.
yes. I mean, of all things, like protect where you live, right?
Yeah.
So like, that's something too. It's just like if you're gonna be late on something, make it sure it's not your mortgage. Do that one on auto pay. But yeah, like FICO is once it gets ruined, it's really, really hard to come back from. So I always tell people like really, get Credit Karma, get a free source and follow it, like get alerts, freeze it so you protect it. Like I have 4 sons and their credit reports have been frozen since the day they had a social security number because I was so worried somebody would just, snatch their I wouldn't even know it because they don't use credit, right? So just like protect those things. And then, I think it evolves, but keep up on, how you keep a healthy credit going. And there's good credit card perks too when you open them. So there's a credit card strategy. I think Sarah Weaver talks about it. She does credit card strategy and, earning points and travel and like still maintaining like healthy credit.
There are I follow a few people, and I think the points guy just, wrote a new book on how to do it too, but
Oh,
yeah,
really?
I follow it too, and I've tried to get trapped into the rewards and churn 'em and everything, but it's a lot of information, so
It is.
I don't do it nearly as well as some other Instagram influencers on there, but I do try some. Like, when I know I have a huge expense coming up, I'm like, "Yeah, I'm gonna swipe my card and get a bonus reward or something like
Totally.
that." But there are some people that live off of balancing those and
I know.
opening them and churning them and whatever they call it and everything.
Yeah. No, I hear you. My dog had some issues and I had to pay a vet bill and it was hurting a little bit because I was like, "Oh, really?" But then I felt a little bit better because I was like, "Okay, Alaska Airlines credit card, like I'm at least gonna earn half a flight on this one."
Yes, yes. Let's
Yeah.
get some on there, yeah. Do you have, like, a favorite type of a deal that you like to fund? Is it, like, a multifamily, or are you, like, with the single family flips and stuff like that? Or what's kinda your ideal?
Yeah. So as a person, I love ground up construction. I like seeing, this is land.
Like, do you fund hard money for ground up construction?
Yeah, we do ground up,
Very
DSCR.
interesting.
Yeah, yeah. And we have a referral
Learn something
program.
new.
Yeah, we have a referral program too, so let me know. And then
Yeah.
all the flip stuff. But I love that because it's the creative thing that I used to like when I flipped is like, okay, this is ugly. Now I'm making it beautiful. But it's really cool just like seeing the architectural design and like what, when you talk to one of these borrowers and they're like, yeah, we're going to take this down and do this and that. Like, I really like that because then I can see the project end and I'm like, oh my gosh, look what we built. Like, it's pretty neat. But those are more difficult to underwrite because it's really about like you're bringing something where there was nothing. So it's you have to really make sure that there's a value there. And like, again, you're not building a luxury SFR in an area that is like the city and, there's a housing crisis. Like they need smaller, like more affordable housing. So it has to make sense. But the easier ones for a lender are really those fix and flips when there's not change in square footage, when there's not change in layout, and it's just like $500,000 purchase, $85,000 rehab, easy in, easy out, 3 to 6 months project. Those are also a favorite because they're just easy to kind of like put through the system and get them done.
Yeah. So you lend in 48 states.
Yes.
How do you do, like, some kind of inspection process through this? Do you have some boots on the ground, or is it, Zoom calls? I mean, take us
Yeah.
through how that stuff works.
Yeah, well, in lending, there's 2 times that we need to get stuff inspected, and it's when you're gonna close on the deal, and most of us hard money lenders use something called an AMC, and it's just basically like you send your need, like, "I need this property inspected for as is and ARV," and you send it to, like, this main hub, and then they put it out there database and they're like, who wants this deal? And all the inspectors or appraisers in the area that do that area or that have time, in the next 2 weeks or, week, whatever the timeline is, they'll bid on it and they'll give pricing. And I don't know how AMC like gives them back to us, but they just usually go like, okay, this inspector picked it up. They'll have it done on this day, da 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 da. And that's kind of nice because you really tap into each market in the state because, we lend in Virginia. I've never been to Virginia, but we have some appraisers there in Virginia. So it's like they know the market. That's good. This does get frustrating though sometimes when it's like a unique area in the state or something and it's harder to find comps. I do find it's frustrating because some appraisers will just, shoot us back some I would say lazy evaluations and it's like, dude, there's a sold comp like down the street or like there's something here and it's just kind of like, where are you getting these comps? But again, we work with the AMC to we can sometimes challenge reports if we find that we have better comps. And they do a really good job because they kind of hold their appraisers accountable. But the biggest thing is we have to be third party. So people are like, can you use my buddy? He's an appraiser. He's been doing it for 20 years. And it's like, we can't because we as a lender can't say, can you appraise this property? We needed to come back at 800,000. So we have to kind of stay out of that. So it's kind of nice to have an AMC because it's just a central hub that kind of sends our orders out. The other time that appraisers come into play is when we're doing rehab on properties. If you do a rehab budget, you'll do draws. We'll have a fund set aside that like does your rehab for you. But you have to say like, okay, I just installed all the windows. I'm going to draw $50,000 for the windows. You'll set up your invoice, like you'll do a video of the inspection and, like, okay, the windows are there. And then we'll say, okay, great. We'll send you your $50,000. And now that's a part of your loan. Back in the day, we used to have to send an inspector out or appraiser out every time we did that. And
Wow.
it made it really hard because people wouldn't get their money for like, we said 7 to 10 days, but it was probably like 10 to 20 days, to be honest, on
Wow.
some deals, which when you're doing construction, you need that money cycling through quicker. But now most of the hard money lenders out there, and us included, went to quick draws where if it's under 75,000 in the draw, we'll just do a video of it and it makes it really quick. So now our draws are more like 3 to 5 days. So it made it really good for everyone around.
Oh, that's awesome. Quick story on my history with hard money lending, and I got out. I was like, "Oh, this is too much. I'm never doing it again." And it was early on my husband and I's first house years ago. We bought it, we remodeled it, we had a tenant in it, and then we were like, all of our money's in there, and we were gonna BRRRR it. And they called and got a local appraiser, and the appraiser came back for less than we bought it for originally after we'd put all this money in it, and I was like, "How did this happen?" So we kept it for a little while, and I think it was about 8 months later, I was like, "Let's just sell it," we were trying to re-strategize and get some of our money back because we had a ton of because we did all the repairs and everything with cash and you just
Yeah.
trying to get it done. So we ended up selling it and it appraised for like 40,000 more than what we were expecting. And I was like, how did this happen? Like, where did this
I
come
know.
from?
I
So
know.
it's all over the place.
Yeah, and they can really make or break a deal. I'm just similar to yours. Like it happens a lot. And the thing I know is I've had borrowers tell me, like, oh, you challenge an appraisal because other lenders don't. They're like, that's what the appraiser said. That's it. And you have to cut down what you can lend or what you can cash out because of what the value is. But we will challenge it. And our company has like an internal value team. So even though the appraiser says like, this or low or high, like we look at it too to make sure like, what were they doing today? Like, did they do a good job or are they doing it in a different state?
Yeah,
So it's kind of nice to have like checks and balances, but
that's
finding a
good.
lender that does that. I mean, I'm sure we're not the only ones that do, but I do know that not every lender will challenge reports and like help to get that money back. So
That would have been helpful. I wish I would have known you back then, but it all happened. It all came out fine. And I even looked into at that time, I was like, I need to become an appraiser. And I looked into it and I was like, good gravy. You've got to work like a whole entire year full time with someone for no pay as a mentorship. And I was like, this is why we're short on appraisers. There's such a huge barrier to actually get into that field.
it is. And then there's a product called a BPO, which is a broker pricing opinion. And it's like, we'll do it if the loan amount's lower than 400,000 and it's not a big rehab or something, because generally they're not like a licensed appraiser. It's not a full appraisal, like one that a bank would accept. but they at least will give us, they'll go in and inspect it, give us value. But those are all like real estate agents that became like brokers to do it. I'm not sure, but I think it's a little less restrictions to get your license to do BPOs. But they've helped us a lot too, and like just the lower price stuff because some of those appraisals can be so expensive.
Yeah. Yeah. Well, that's good to know. Well, I think that's all the information. Where can we find you? Where can we see these webinars you've referred to?
Yeah.
And how can we get all that information from you?
Yeah. So I laugh because at the end of all my presentations, I say it took me 44 years, but follow me on Instagram because I finally made an Instagram last year that was for work. I always had everything on my personal, and I'm not even good at those. Like my kids are like, stop posting. And I'm like, just get off my Instagram, Ben. Like, let me post. But yeah, so my Instagram is melissakorda.lender.re. And I can send this to you too if
Yeah,
you.
we'll put the links in the show notes as well.
Yeah, and then in it, if you go to my link tree, I try to keep up with all the events that I'm speaking at, and then my webinar is in there. So I committed to this for 2025, and I'm really excited. But it's a monthly webinar, the first Wednesday of every month, and it's an hour. I'm either going to speak and teach like the basics, or I'm going to answer all your questions or talk deals. It's just a place to like come and talk to me, and not just about like what we do, but kind of like, I have DTI. Should I use conventional? Like I had that question last time. And, I kind of just give my input of like, as a lender and all the different aspects of lending, because there's a lot of not just hard money, like there's PMLs, there's conventional, using cash sometimes makes sense. But yeah, so it's just a place. It's not recorded. So it's a place to ask those questions that people are like, I have dumb questions. And yeah, it was really, so we did it last January. It was the first one, and it was really fun.
Oh, I
It
love it.
Yeah, better than just like my PowerPoints. I mean, PowerPoints are good, but like this was more open forum, and just I like that. So that's every month, and that link is in there as well. And then just ways to get on my calendar and, just follow my Instagram because we try to post engaging things that will help investors.
That's good. No, I love it. I love all the information. And it's a lot of information, like the difference between hard money and going to, your local bank and everything. Cause I feel like you have a lot more flexibility than they do sometimes. And so, Melissa,
Yeah,
thank you so much for sharing all this information today. We appreciate you. And
absolutely. Thanks for having me. I'm excited to grow more with you, and I'm excited for your podcast.
yes, yes. All
Cool.
right. We'll talk later, and I'll put in the show notes everything you need to know about Melissa and where to find her. See you next time. Thanks for joining me on another episode of REI Accounting Talk. Don't forget to check out our show notes for additional resources and templates mentioned in today's episode. Have a specific accounting challenge you'd like for me to address? Reach out through our website or social media channels. You can find me on Instagram at rei.solutions.with.sarah. Together, we're building a community of confident, financially savvy real estate investors. See you next week.